Imagine waking up tomorrow to a notification that says, AI, crash, and trillions gone, in giant letters. Your first thought is probably going to be whether or not this actually ruins your day, or if it's just Wall Street drama. To figure that out, you really just have to look at the money flowing through the tech sector right now. For example, SpaceX recently bought Cursor, a code editor that started as a basic VS Code fork for $60 billion. OpenAI is sitting around an $850 billion valuation, and Anthropic is pushing aggressively toward $1 trillion. The concerning part isn't just the big numbers, it's how these companies are being valued. Right now, AI stocks are trading at roughly 21 times their actual revenue. For context, a normal software company trades at maybe a 5x multiple. Investors are essentially paying a massive premium for every single dollar these AI startups actually bring in, just hoping it pays off later. And the risk gets much worse when you zoom out to the broader stock market. You currently have 7 tech giants Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla, propping up 35% of the entire S&P 500. We literally haven't seen the market this top-heavy since the peak of the dot-com bubble. Right now, the total value of the US stock market is almost double the country's actual GDP. Because everything is so interconnected, an AI hype train derailment wouldn't just be a minor market correction. Financial analysts estimate that an AI crash could wipe out something like $33 trillion in value. If you want a preview of what that kind of damage feels like, you just have to look back at the year 2000. When the dot-com bubble burst, the Nasdaq tanked by 80%, and it took 7 long years for the broader market to claw its way back. But there is a huge difference this time around. Back then, the companies failing were mostly unproven internet startups, whereas today, the companies driving this bubble are the foundation of the global economy. This also trickles down to regular businesses that have integrated this tech into their daily operations. I'm talking about local coffee shops using AI for customer service, trucking companies depending on automated routing, or school districts that threw their budgets at AI hardware. If the venture capital dries up and these tech startups go bankrupt, their servers eventually get shut off. Think about a logistics warehouse that updated its entire sorting line to use automated AI robot arms. If the startup powering those arms goes under, that supply chain just halts. You would see the same thing happen to a marketing agency that fired its staff to rely on ChatGPT, or an independent design studio that built its workflow around Midjourney. The moment those cloud tools go offline, those businesses have no product and no backup plan. It even impacts agriculture if a farm's AI-powered crop monitoring drones suddenly lose satellite support. Even the biggest players aren't entirely safe from the fallout. Meta is essentially throwing its entire war chest at AI development, while Google is completely overhauling its search engine to feature AI summaries. Microsoft has shoved Copilot into every piece of software they own, and Nvidia is the one supplying the hardware for all of it. If investors suddenly decide AI isn't going to turn a massive profit as fast as they originally thought, the stock prices of these tech titans are going to plummet. Wall Street is currently pricing in a utopian future, but if that future gets delayed, the crash happens today. And that hits you directly, even if you don't care about tech. Your pension or 401k is probably heavily invested in the S&P 500, which means your retirement is riding on these tech stocks staying valuable. On top of that, your employer might have overextended their budget on AI integration, leading to immediate layoffs when the tech fails to deliver a fast return on investment. It is exactly what happened in the dot-com era, where everything felt completely unstoppable, until the exact moment people stopped believing in the hype. AI is definitely going to change the world eventually. But right now, the market is assuming these companies are worth perfection. The servers powering these tools might still be running when the bubble bursts, but the trillions of dollars backing them will evaporate overnight. Let me know what you think in the comments. Are we looking at the next industrial revolution? Or is this just the biggest financial bubble in history?